Hello dear students and audiences. Welcome back to our channel. Today we're starting chapter 1 of ACCA third paper, which is Financial Accounting. First, visual overview, where we'll learn the purpose of financial reporting in a simple and easy way. Let's begin. Every business needs to keep track of its money, what it earns, what it spends, and what it owns. This is where financial reporting comes in. Financial reporting means preparing financial statements that show the performance and position of a business. It helps owners, investors, and others understand how well the business is doing. Business entities. There are different types of businesses. 1. Sole traders, owned by one person. 2. Partnerships, owned by 2 or more people who share profits. 3. Limited liability companies, separate legal entities, meaning the owners are not personally responsible for all. Debts. Financial statements. Financial statements are the main reports that show a company's financial health. They include 1. Statement of financial position. Shows assets, liabilities, and equity, what the business owns and owes. 2. Statement of profit or loss and other comprehensive income. Shows income, expenses, and profit. 3. Statement of cash flows. Shows where cash comes from and where it goes. 4. Statement of changes in equity. Shows how the owner's equity changes during the year. Users of financial statements. Many people use financial statements, such as owners and investors to see profit and growth, managers to make better decisions, banks and creditors to check if the business can repay loans, government and tax authorities to collect taxes correctly, employees and the public to know about the company's stability. These are all called stakeholders, people who are interested in the business. In today's lesson, we'll talk about types of business entities, a very important topic for your exams and real-world understanding. What is a business entity? A business exists to make a profit by producing and selling goods or services. Profit is simply the difference between income and expenses. Even though all businesses aim to earn profit, they can be different in size, financing, and legal structure. These differences affect how financial statements are prepared and reported. Businesses usually operate in one of 3 main forms: sole trader, partnership, limited liability company. 2. Sole trader. A sole trader is a business owned, managed, and controlled by one person. Legal features. The owner makes all business decisions alone. If the owner sells the business, the new owner becomes the new sole trader. If the owner leaves or dies, the business stops unless it's sold. The owner and business are the same legal person. There's no separation between them. The sole trader is personally responsible for all debts and legal issues. Advantages. Full control over all decisions. Easy to set up and operate. No company law formalities or need to publish financial statements. Flexible. The owner decides how to run the business. Disadvantages. Unlimited liability. Personal assets may be used to pay debts. Limited finance. Hard to raise. Large amounts of money. Part IP 173H. Improved process. Which group is most interested in a sole trader's financial statements? 3. Partnership. A partnership is when 2 or more people run a business together to make profit. Legal features. New partners can join only if everyone agrees. If one partner leaves, the partnership usually ends unless there's an agreement to continue. Partners are jointly liable for debts. No separation between the partners and the business. The business itself is taxed on its total profits. Advantages. Roles and profit sharing are usually agreed in a partnership agreement. Easier to raise finance. New partners can invest money. No need to publish financial statements. Partners bring different skills and experience, improving the business. Business risks are shared among partners. Disadvantages. Legal agreement setup can be costly. Decision-making can be slow if partners disagree. Profits must be shared. If a partner leaves or dies, the business may need to be reformed. Each partner's personal assets are at risk if the business fails. Disputes can damage the partnership. Limited liability company. A limited liability company, LLC, is different. It's a separate legal entity from its owners. People invest in the company by buying shares and become shareholders. Shareholders hire directors to manage the company on their behalf. There are two types. Private limited company, LTD, smaller, with restricted share transfers. Public limited company, PLC, larger, listed on the stock exchange, open to public investors. Legal features. Shareholders can buy or sell shares easily. The company continues to exist even if ownership changes. The company pays corporate tax on profits. Shareholders are taxed separately. The company can own property in its own name. Legal responsibility is limited to the company itself, not the shareholders personally. Advantages. Limited liability. Shareholders' personal assets are safe. Easier to raise large finance through share issues. Business continuity. Ownership changes don't stop operations. Disadvantages. Setup costs are higher. More administration and regulations to follow. Double taxation. Company pays tax on profit and shareholders pay tax on dividends. Less privacy. Must file annual reports and share information publicly. Summary. Business type key owners, liability, continuity, main advantage, main disadvantage. Sole trader. One person, unlimited, ends with owner, easy control, personal. Risk. Partnership. Two or more, unlimited, shared. Ends unless continued, shared skills, disputes and shared profit. Limited. Company. Shareholders, limited, continuous. Limited liability. Expensive setup. And that's it for today's lesson, Types of Business Entities. You've learned the meaning, key features, and pros and cons of sole traders, partnerships, and limited liability companies. In the exam, remember to focus on differences in liability, taxation, and continuity. If you found this video helpful, please like, share, and subscribe for more easy accounting lessons.